Hey, welcome to Probate Weekly. I'm Bill Gross at Bill Gross Probate on social media or billgrossprobate.com. And we do this every Thursday morning. We live stream it at 9 o'clock a.m. Pacific time, 12 Eastern. And this week we're on the East Coast with our guest. And then we rebroadcast this at 4 p.m. Pacific time on other social media. So this is a Zoom call. And we do this because it's meant to be interactive. I think one of the things I try to push the agents in my team, I have a national team of probate experts that I push them to do is do their own video, interview people, ask you questions. And so if you're a real estate agent or attorney looking to build your business by doing interview videos, it's a chance to talk to the guests that I bring on. So I'd love to have you along the way. Raise your hand, put a question in the chat box, or just jump in at the right time and we'll bring you in. But I think it'd be a great experience for you. So this is meant to be interactive and live. It is a Zoom call, but we do also put it on the replays on YouTube. If you want to register, go to probateweekly.com. Let me share that real quick. Probateweekly.com, pretty easy to remember, hopefully. And all you do is put in your email address and you'll get reminder emails with the link to the Zoom call. And then if you'll go to see us on other formats, you can click there. We're on Apple and Spotify and all that stuff. And then the past episodes are on YouTube as well. We continue the conversation in Facebook, with a Facebook group called Probate Weekly. So if you have questions, more importantly, if you have probate or trust-related content, feel free to post it there. Questions, looking for referrals for attorneys or realtors around the country or reverse mortgage agents, go to Probate Weekly in the Facebook group. We'd love to have you participate there. Our guest today is Jason Eichmiller from keyhomelending.com. And here's his webpage. He's at keyhomelending.com is the website. And then you'll notice a picture of him here. And then here he is. This is the real Jason.
Yes.
Jason's
More like it.
And then his assistant's on the right there. I don't know that guy's name, but anyhow. But you just notice he's smiling all the time. He's a happy guy because he lives in Florida. We're glad to have him here today. And this is his second appearance on Probate Weekly. Jason, thanks for coming back.
Oh man, thanks so much for having me again, Bill. That's a great introduction. You see my picture through the years. But yeah, I'm just a dad. I'm a goofball who tries to raise his kids right and chase them all over the place. And then in my spare time, I own Key Home Lending and do a lot of reverse mortgages. Done them since 2008. So anything I can do to help you guys, I'm glad to.
Well, you're the goofball lender, dad, I guess. I'm the goofball grandparent. My whole life these days has become about watching
Yeah.
my grandkids one place or the other. So I think that's the privilege of success in business is being able to spend time with important people. So, but let's talk about the business. Now, while you are a mortgage lender and able to do regular loans, I know your focus and you position yourself as a reverse mortgage specialist. So talk a bit about what does it mean to you? Is it just a marketing focus, or are there specific tools and or skills you have as a reverse mortgage specialist that you've developed over time that you didn't have when you started with that product?
Oh man, so great question. I started doing reverses. I started doing mortgages in general and reverses in late 2008. And if you think about history, what happened in late 2008, think about like the worst time to start in mortgages. And I just intelligently picked that. I started doing reverses. I actually didn't start doing regular mortgages until 2021. So reverses, they're a mortgage just like anything else. You don't need any sort of specific license to be able to do them. But what you do need, and I experienced as I screwed up probably every single which way that you can possibly screw up when I first started doing them, you need at bats. You need to talk to seniors. You need to know kind of their motivation, what makes them tick. I mean, the biggest question I ask these seniors when I speak with them is, hey, let's take this vocabulary term out of the way. A reverse mortgage is just a mortgage where you don't have to make payments if you don't want to. There you go. There's a secret. But what do you want? Like, what does this need to do for you to improve your life? And then they tell me, and then I figure out, okay, well, it either can do it or it can't. And if it can't, I do my best to identify that and figure that out really quick so I don't have them kind of chained along and hoping for something that they can't get. But if I can do it, then we isolate the ways that they can do it, their options, go deep down the rabbit hole on their fees, interest rates, all that fun stuff. And then my whole goal for them is to make it easy, to make sure that they get everything that they can get and it's done in the best way possible and have them in and out within about 30 days. But I think back to your original question is what kind of tools do you need? It's just experience. It's at bats. It's knowing that this is a very specific loan product, kind of like the 203Ks, DSCR loans. If you think about any specific program or direction you go into, if you're going to be good at it, you need to be an expert, or you need to have a really solid team behind you who can, if you don't know, because sometimes people give me questions that I can't answer. 450 reverse mortgages in, and very occasionally I get stuff that I can't answer. But fortunately, I got a couple people that I can turn to get answers pretty quick.
I should have teed up also on this interview. For those of you watching, I often get called, well, why are you interviewing this guy? Like he is not an affiliate. I don't get paid by him, or I don't get referral fees. We become
Yeah.
friends. We've done a couple interviews over time. He's been in the episode before. But there's three reasons why I interview people on this podcast. Number one is to introduce a tool to my business to learn how to use it better. So I've met Jason, and every time I talk to him, I learn a little bit about how to be more effective in my job, and how to, maybe when somebody needs reverse mortgage, be more effective in helping my customer by introducing him. Second is referrals. Obviously, we want to meet people and learn who can refer business back and forth. And that's part of it, but that's not the main focus. And I think we overlook that one. The third one I think is most important is there's certain business principles, because he's in a related business talking to some of the same people we're chasing, that some of the same principles that have built his business to his success can be applied to ours. And the one I want to point out, he just mentioned, was the importance of at-bats. I know when I started in probate, I chased after business that the more successful probate agents to go after, smaller deals, lower income people, more complicated probate cases. But those at bats taught me things that now I use in bigger business. And so just pay attention, I think. Don't get caught up in, well, he's doing mortgages and I'm doing real estate, or I'm an attorney. This is really about how to build our business, and the success principles, I think, apply across your business. So thanks for sharing at bats. So when you started, were there at bats that you took that maybe today you might not, because your business now is more developed?
Oh man, you just brought up an awesome point. So when I started, everybody starts in different places. So take this as like a 10,000-foot level. But I worked in a call center, and before they trusted, they threw these commercials on, and our celebrity spokesman was Robert Wagner. So those were the Bobby Wags leads that were really good, but they didn't give the rookies the Bobby Wags leads because they were expensive. We had to call through redibs. Redibs were just people who were in the system who at some point in time said they were interested, but then told their former agent to bug off, or I don't want to, or hung up on them, or whatever. So you had to get a couple of those deals in before you got the good lead, like the Glen Gary leads, right?
That's a
So
great reference. Those are no Glengarry Glen Ross is a movie.
yeah,
For those, most people in business is too old for you. You should go back and watch it. It's still applicable today. Alec Baldwin, his speech in that movie
yeah.
is just classic. I'm sorry. Go ahead, Jason.
Oh yeah, totally. So what I did, and they tracked absolutely everything. I had over, I think it was a long time ago in 2008 and early 2009, but day by day, it was about an 8.5, 9 hour day. I was on the phone for over 5 hours of talk time. My calls were ridiculous. I didn't take lunches. I had these like these are little protein cookie things. I ate it at my desk. I didn't give a damn. It was just like call, 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 call. No, 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 no. And finally I got to talk to somebody, and finally I got to talk to more people. And that led to the very first deal that I closed. It was actually a lady in Long Island, New York, for her mom. It's crazy. You remember this stuff from 2008, but she was looking at a reverse for her mom. It wasn't the right time, and they had when they rejected the last guy, and they had an attorney involved. And so mortgage people like us, especially when you're in a call center atmosphere, you're trained to say, oh, don't talk to the attorney. The attorney doesn't know anything because he's not licensed. The financial advisor, they're just trying to kill the deal. They're trying to kill the deal. So I just naively, probably because I didn't have a good comeback, I was like, oh yeah, talk to the attorney. It's an awesome program. Here's the fees. Here's everything. And the attorney told him, hey, you know what? This guy's honest. He doesn't have anything to hide. You need it anyway. So close a deal with him. And then that attorney referred me other deals afterwards. So I guess my whole point is activity is everything, especially in the beginning. So whether you're banging the phones, whether you're going door to door, whatever you've got to do, just do more than anybody else. And it's tedious and you get hung up on a lot of times, but there's all sorts of cliches. God, this is going into sales training. It's kind of cool. All sorts of cliches about like that kind of process, like your next, you get hung up on, it's closer to getting you to the real yes, or however many no's gets you to the real yes, whatever. Just bang the phones and then you'll get some traction, and you just do it over and over and over and over and over again and grind, and then you become pretty damn good if you keep up with it.
No, I think it's such an important lesson. I get asked all the time by people who want to start in probate real estate as an agent. And the classic is, well, I'm going to buy the leads, then I'm going to mail out the letters. I'm just going to talk to people who call me,
Mhm.
or I'll buy the leads and have somebody else cold call, set appointments for me, and then talk to them. And what they don't realize is if you haven't been talking to people and learning kind of the vocabulary, their problems, their perspective, you're not going to be effective at closing the deals. That comes with time. And so anybody I think new in a business should start off with cold calling that target audience, whether it be on the phones or in person,
Mhm.
or somehow meeting, going to open houses, meeting people, invite them as much as you can just to get the dialogue going. So you know what to say. Same with attorneys. You should go to court. You should go to as many networking events as you can to meet attorneys. So you learn the talk so that when you have a real deal, you don't fumble the ball. I think sometimes it's how much practice it goes into when you get a real lead. So, so how long were you in the call center format before you kind of developed your own book of business?
I'm going to answer that in a second, but just know that you guys are going to fumble the ball anyway.
Yes.
I'm whatever year, this is 2024, so I've been doing this for almost 16 years. I still screw up sometimes. I still like say the wrong thing, or people just don't like my personality. They don't go with me. I don't care. I mean, I care. I want every deal that I can get, but it's like your learning is going to come over time. It's going to be an evolution, but every little tweak that you can make, if you can look at, and don't bring an ego there or anything, like, oh, you screw up, they don't want to go with you. It's blame it on yourself. Don't blame it on them. Like, okay, well, did I not connect? Like, did I, like, you've got tonality that you can work with, you've got pitch, you've got pace, you've got all these things that you can, these little tricks and tools that you can use when you're communicating with people. Maybe you got to ask better questions. I found that psychology is the absolute biggest thing. Like, why do you need this? Take me through the pain, pain, pain. And again, this is like sales stuff. But the more I can get into the pain, that means the more that my prospects trust me and they'll open up to me. And when I tell them, like, hey, I think I understand what you need, but just tell me if I've got something wrong. And I repeat back, oh yeah, so you need this, you need that, and I think this is painful too. So I think we can fix it this way. What did I leave out? They're like, oh my God, this is exactly what I need. I've heard bad stuff about reverses, but please help me if you can. So that's that. Answering your sorry, but answering your question, Bill, I was in the call center from late 2008 until 2012. I got moved up. I became like a vice president with the company. And at that point in
Ooh.
time, I was managing salespeople. And my true joy with this is not managing metrics or numbers or telling people to come to work and bang the phones. What I really liked was just helping people and knowing, maybe this is like a little ego thing, but knowing that this little thing that I did completely changed their lives. So my whole, and everybody's different. Everybody has different motivations. But I was like, man, if I could just do this over and over and over again and not deal with not deal with telling anybody else what to do, just helping more people, then yeah, that was 2012, and now it's 2024. So it was like 12 years of kind of doing the same thing, figuring it out on my own, I guess.
Okay, just a quick reminder, this is a live Zoom call, so if you're on the call, feel free to put questions in the chat box or raise your hand. Love you to come in and take the opportunity to develop your skills interviewing, asking good questions. This is recorded. We're going to rebroadcast this on YouTube and Facebook and LinkedIn, all those good channels. And then again, a quick reminder, our guest today, Jason Eichmiller, is a reverse lending specialist based in Florida, but lends across the country. We'll talk about that a bit. And this is Probate Weekly, and you can sign up and register, come in on the Zoom call while we're live here at probateweekly.com. So let's talk about the use cases of reverse mortgages specifically in probate. I mean, I understand that people can refinance into that. Oftentimes we get people who are, I said a couple use cases that I get as a probate agent. Number one is somebody's about to inherit a property along with somebody else, but they really can't afford to buy it because they don't have the income, they don't qualify, they've never really had the kind of financial structure to do that. But sometimes if they're older, the reverse mortgage becomes an option where they can take over the property. They don't need to make payments. And there can be some equity created for the other party. Talk a little bit about the reverse mortgage and how it helps people who can't qualify to buy a property based on the equity and their age.
Yeah, sure. So equity you do have to qualify for. So I'm not just going to tell you guys the good stuff. I'll tell you what to watch out for and who doesn't qualify, and that's probably just as or more important than who's the perfect example for this. But we do help people use reverse mortgages to buy their home. Just so you know, the minimum age to do this is 55. For the government, you might be thinking, wait a minute, I heard it's 62. Everybody says 62. For the government reverse, it's 62. But for this proprietary reverse, which is outside the government, it's age 55. And I actually have a lady, wonderful lady, Alex. She's closing today, 2 p.m. Pacific. She's in California and she's under 62. So she's doing a as we call it, a proprietary, or you call it a jumbo reverse mortgage. But anyway, if you're looking to buy, if you have somebody who wants to kind of take over their parents' home, grandparents died, parents died. So first thing again is age. You got to be at least 55 to do it. Then you have equity position. And this is the thing that makes it's either perfect or it's not. And there's very little gray area with it. So for a reverse to purchase, or any sort of reverse, the loan to value, or in English, the loan size that we're going to give you, it depends on your age. So the older you are, the less money you've got to put down on the purchase. The younger you are, the more money you've got to put down on the purchase. So let's say that you're 70 years old and your dad dies and you're looking and you're saying, hey, you know what? I want this house as my forever home. Or if you want to give me an example, that's cool too. I had that situation with a guy named Al, not about 3 or 4 months ago. And he inherited the house. He just had to pay off the loan that was owed. So we used a reverse. It was about a $600,000 house. The reverse covered about 220, 230 of it. So 200 something was what the reverse kicked in, and he had funds to kick in the rest of the money. So it worked wonderfully for him because he had a decent amount of money, but this is not the program, just for you guys. It's not the program. This isn't a 10% down or 20% down or 30% down. Unless somebody's in their 90s, and you're probably not buying a house in your 90s to tell. Although I have a lady in her mid 80s who's downsizing to buy. You're going to put more than 50. Right now, the way interest rates are right now, you're going to put more than 50% down. As interest rates drop, then the loan sizes normally go up. So we'll see that as, you know, how the Fed dropped the overnight rate 50 basis points or 0.5% last week. We'll see that over time, if that continues, loan sizes are going to go up with reverses. But as of now, it kind of like is what it is. So you're going to put more than 50% down, in most cases, more than 60% down. If you have the money, that's terrific. But where it becomes a benefit, because you're like, why the hell would I do that? Why not just pay all cash? Why not just get a mortgage? Well, in a lot of cases, you don't want to get a mortgage because you're on fixed income and you don't want all your cash flow going straight to the mortgage payment. And in a lot of other cases, you don't want to pay all cash because depending on where that money's coming from, there might be taxes, like if you're going from qualified money, which is like a 401k or an IRA, or maybe you just don't, you talk to your financial advisor, or even if you don't have one, you're like, yeah, I could pay for this cash, but that's all my money. And then I don't have a safety net. And in retirement, you have to have a safety net. You have to have some branches on your money tree left over because you don't know what's going to happen. I call it I don't know if I can say colorful language here. So I'll just say it's the Murphy's Law, or the oh shit bank account that you want to still have. So that's how reverse for purchases work pretty well is, yeah, you've got to put a decent amount of money down, but you don't have to pay all of it. You still get the house. It's like a cash purchase because you don't have any monthly payments. And not having monthly payments when you're on fixed income, it is so, so powerful. So that's just one example right there.
And I think the opposite case that I come across is where somebody's going to inherit a property,
Hmm.
but they need to pay off another heir, some of it, or multiple heirs. They don't have just enough money to do that. Maybe there's other liquid assets or the properties, and the reverse can get them 10, 20%, 25% equity out in cash form without adding a monthly expense to their pocket. And so again, it's just another tool in the toolbox I think we as
Hmm.
agents need to look at as we try to help our customers set up. One of
Bill,
the Yes.
I hate to
Hey,
interrupt.
Joanne.
Hi there. I was trying to find my raise the hand thing, but I couldn't find it on my iPad. I have a quick question for you.
Sure.
I have a scenario. I have a very good friend who lives in El Paso, Texas, and
Hmm.
he owns his own home, but his parents also own a home, their home, and they've been in it for years, and they already have a reverse mortgage on the house. And I've already had, a full conversation with him. But the son is 63,
Hmm.
and we worked together when we were in the military. He wants to buy that house. Right now, his father is 85 years old and his mother is 83, and they're both in good sound mind and body. And he's concerned, if one parent becomes incapacitated or whatever, he wants to get control over that house. Can he assume that mortgage?
No. He'll have to actually buy it. Sorry for the
Okay.
the quick answer. Like, no, he can't.
Okay.
No, he will have to buy it. A
Okay.
couple of things that his parents can do real quick,
Uh-huh.
if you want to go down the rabbit hole real quick. If he's concerned about the interest accruing, he can just take one of their reverse mortgage statements and he can calculate out, or if you want to email it to me, it's super cool. He can take a look at what the interest is and he can just pay that monthly and then the interest will stop accruing if that's a big deal to him. If he just
Mhm.
wants his parents, I don't know. His parents are kind of in a perfect situation right now where they don't have a mortgage to pay and they're both there. If something happens to one parent, the other's okay. So I'd have
Well,
to think a little bit. Yeah, go ahead.
well, actually, they owe about what $70,000 on the home,
Okay.
and so his original plan was he really wanted to go in and buy that house. So he was just trying to throw out different scenarios and everything, and he hasn't had a chance to talk to a mortgage lender, and I just and
I
he
would
has
throw
a
out
great.
to I throw out to what you might consider
Uh-huh.
is I don't know that necessarily he wants to buy the house other than he wants to control the house.
Mm-hmm.
Because if you change title, that's going to trigger perhaps required payoff on the loan. Of
Right.
100%.
course, not incapacity, but death would require as well, because the reverse mortgage lenders check social security numbers and use that to call loans due as well. However, if they're alive and they're physically going to be around for a while, he can either do some sort of a wrap or an option to buy, and that way it's not an actual trend. That's something you need to talk to in Texas, and maybe an attorney or a real estate broker, but an option to buy so that when they pass, but in the meantime there's still the reverse mortgage is in place, and whatever equity to the property appreciation accrues to him, if that's the deal they make, or to them if that's the deal they make, depending on if there's other heirs. So there's ways that you can either buy the property and wrap that loan and not record it within the family, or put it in a trust within the family, or more importantly, not even purchase it, but make an option to buy when something happens. So definitely worth talking to an attorney for an estate plan, I think, in this case.
Okay, you said wrapping the loan. His
Wrap a
home.
loan means that if you buy a property, let's
Uh-huh.
say a property's worth 500 and you have a $250,000 first,
Uh-huh.
you take the responsibility for covering the first, whether it be the interest or the payments, whatever, and then you
Uh-huh.
give the party the second. It could be in cash, or it could be in a deed, it could be in a payment program. So there's different ways to manage that. So again, it depends on their particular goals and tax implications. This is the kind of thing that should be really handled as part of the estate plan. And then the
Okay.
other part is if there's other errors, you want to avoid litigation. So it has to be done in a way that's above board, and everybody, when you say incapacitated, what does that mean mentally? So, but this part of the estate plan, but there are solutions, creative solutions that can be done, particularly not, and probably not buying the property. If the parents are alive and physically healthy,
Yeah.
there's no reason to force the issue. If they have a good mortgage and if the rate's competitive, then you might want to keep it there and make it easy for cash flow.
Okay.
Yeah. One thing I'll just step in and add to that, Joanne, is I don't know if they have this done, but if not, they should. And everybody, when you're talking about whether it's your parents or your elderly, like older clients, have them do a power of attorney immediately and make sure that they get a corresponding doctor's note stating that at the point of time that the power of attorney was done, that they were in their right mental facilities. I have people who come to, and actually in the past few months, I've done like one a month, power of attorney cases where it's kids doing reverses for home health care for their demented parents. And in every single case of these, we need to, for the reverse to be done, and probably in other circumstances as well, but certainly for the reverse, you have to have a POA that was signed, and you need a corresponding doctor's note stating that at the point of time that the POA was signed, that mom and dad, they could handle their financial affairs. They weren't they weren't demented yet. So sometimes I've had deals die because of that, and the son's like, "Man, this is the only thing I can do to keep my parents in the house." And I'm like, dude, I got to get the doctor's note. Like, your mom's been demented for 3 years and you got the POA yesterday. You're SOL, brother. You can't do a reverse now. So just a word to the wise on that.
He already has a power of attorney because his father had to go into hospital last year.
Okay,
And
good.
so since his mother was, in her 80s, he came in and he took over because he took care of the dad. So so that is already in place.
Cool. And there's one on mom too?
I don't know if there's one on
Get it
mom.
on the mom. I'd get it on the mom. I mean, maybe not this case, it doesn't matter, but just like
In
for,
general,
yeah,
good.
general.
Yeah.
Yeah.
Okay. All right.
Thanks, Joanne.
I'll
You know,
give
I
him a
think that
call.
this kind of leads me to the next point I have, which is, how much of your work is somebody didn't plan ahead and is scrambling with a solution, and how much better off would your customers be had they planned ahead and had a proper estate plan with power of attorney, with putting properties in trust to make more options available more easily. So where are you on that process?
So people come to me, unfortunately, most of the time people come to me when they're behind the ball. I do get planners. I get 62-year-olds who are free and clear on their house. Everything is wrapped up. They have no bills. They're thinking like, hey, I got some money behind it, but I want to unlock this line of credit. The neat thing about a reverse mortgage line of credit is it grows year after year after year after year, tax-free. Really neat thing. But so they'll call because they're looking to plan. They're unique. Unfortunately, I wish everybody was like that, but I do get very reactive folks who are in the circumstance where, oh shit, I should have done something last year or 6 months ago or 3 months ago. I have a lady that I closed yesterday in my neck of the woods. She came to me because she was in foreclosure with her HOA. And that makes things tricky with reverses because the FHA, which is again the government reverse, they don't like HOA foreclosures or any sort of foreclosures. So I had to go to a proprietary one, and we got it done, and she closed, and she's super happy. But she's reactive. If she would have come to me 2 years ago, before this garbage started happening, before she had money troubles, then it would have been done very quickly, very easily in like 15 or 20 days, and she wouldn't have had to think about it. But unfortunately, that's not the world that we live in. I will say in California, about 70% of the reverses that I do have a trust on the property.
Interesting.
Yeah. So it's weird. It's really just Cali and some in Florida. But yeah, California people are a little bit more put together. But then financially, there's 80% of the time there's something going on.
Well, I think in California, estate planning is more important because probate is more expensive and more cumbersome here than most other states. And that's what's driving my point is for those of us on this call, if we're professionals, either realtors or attorneys, we should be pushing our customers to plan ahead. The reverse mortgage can be a piece of that puzzle. And at the same time, it also can be a piece like probate you want to avoid depending what the costs are. To do reverse mortgage, if you're just going to get a credit line, meaning you don't need cash, you still have to pay the fees out of pocket, correct?
No, just some fees. So anytime you get a reverse, this is going to be a blanket statement for all reverses. The only thing you've got to pay out of pocket are counseling. Counseling is just like a 40-minute phone call where they speak with somebody licensed by HUD and the FHA. They would just want to make sure that I'm not going through and saying, hey, it's free money, you don't have to live in the house. They want to make sure that you know kind of what your responsibilities are. So that's about 150. Then you get an appraisal done, and normally it just depends on the value. If I'm looking at a $2 or $3 million house, then you're looking at about $1,000 for the appraisal. If it's not that much, if it's a smaller house, and you're looking at about 600. So those are the costs out of pocket. Yes, there are other closing costs, but they roll into the loan. They add on. So talk about like my guy Gary, who had no need for this at all, who was 62, free and clear with everything. He was just like, hey, I want to get a growing line of credit for my house. He saw the growth on these amortization tables that I gave him. He's like, this is ridiculous. He's like, it's the best. He actually wrote me a letter yesterday about it. He's so happy about it. His closing costs, he has $1 million house. His closing costs were in the mid-20s. That's it's not as much as selling your house, but I mean, that's a decent size with closing costs.
Right.
He did not bat an eyelid or eyeball or whatever the saying is. He didn't care at all. Eyelash, there you go. Yeah, that was the next thing I was going to say. He did not care. He got a growing line of credit that's growing at about 7% something this year, and it's going to compound. And there's going to be a hell of a lot more money later on when he actually needs it. He thought $20,000 rolled in. Who cares? So
how much was the line of
kind
credit? How much was the line of credit for?
I don't remember. If you ask me, I can actually look it up, but I don't want to pause the conversation to look everything up. But somewhere around $300,000 or so.
And so that's the point, is that now you have $300,000 to use for the estate, if necessary, instead of having to sell a company, instead of having to sell stock, instead of and that may be used to buy a life insurance policy to protect a business. It provides so much flexibility that for people who own houses free and clear. And now more and more people keep those homes, especially houses over 5 million in LA. They're keeping them, renting them more and more. And so you have the kind of this debt equity. It's being rented. So it's hard to get a refinance on a loan that you're renting out now. On the high-end homes, they tend to be inconsistent rentals, short-term rentals rather than leases, hard to finance. And so here you have a chance to at least get a line of credit against it that you could use and use some of that cash for improvements or for other purposes. So definitely worth looking into. Okay. Next question I had was, I asked the question, I think, just make sure that you answer this the way, the detail I wanted.
I probably didn't.
No, you did. I asked you about what's the difference between I'm a specialist versus I happen to be a lender at a loan company that has reverse mortgages in my long list of possibilities. And we talked a bit about the advantage of experience and the advantage of the number of repetition that you had. But are there specific programs that you have as a specialist, or particular procedures or processes that you're familiar with that maybe somebody who spends all day doing conventional loans or FHA purchase loans may not be as familiar with?
Yeah, I think it's, how do I answer this? Anybody can get the programs that I have. I don't have anything special I don't have any special companies that say, oh, Jason, you're so great, I'm only going to let you. I wish I did. That would be great. But no, everybody has access to these. Where I guess I kind of hang my hat is that I've got all of them and I know where to go. I've got multiple investors for similar products. With the FHA reverses, it's not too much of a big deal besides pricing. I've got a couple of lenders that price way better than anybody else, so I can pass the savings down to my clients. I make the same amount of money, but they get better deals. So that's pretty cool. But then, yeah, it really just becomes, maybe it's a cliche, maybe not. I don't know. It's experience. How smooth do you want your process to be? So if you work with there's three types of people. I'll go me last. One is if you work with somebody who does conventional mortgages and kind of onesie twosies, these reverse mortgages, they'll get it to close and they'll have an account executive behind them that can help them. Is it going to be smooth? Probably not the smoothest. Is it going to take a little bit longer? Probably. The challenge will be also, number one, do they have all the programs? Like, what if they have to do a proprietary and the lender is only telling them about the HECM? HECM again being government reverse mortgage, or vice versa. What if they need something specific? I've got one lender and there's only one out there that does reverse mortgages as a second mortgage. Very few people have that program just because there's not a lot of demand for it. I don't close a lot. I close maybe 5 a year. But for somebody who has a low interest rate on their first mortgage, but their credit cards are killing them, or they need extra money for something else, they want to keep their regular mortgage and then get rid of the credit cards or invest in a business. It's super smart. So I can use that. I don't know too many other lenders that have them. So yeah, you got a little bit of process, you've got a little bit of having all the products. But then also when you go with say, let's say you call into a Mutual of Omaha, they're a big reverse mortgage lender, or a Longbridge, they're one, Finance of America, they're another one. If you talk to a captive LO there, sure, all they do is reverse mortgages. But they're only able to recommend their products. But what if you have a different company that's better? Or for example, what if you have you call into Longbridge, but Finance of America is the one who has the second? Well, Longbridge isn't going to say, hey, go over to Finance of America. They'll give you exactly what you need. No, they're looking after their own money, and they're going to say, for the most part, oh yeah, you got to do this, even though it's not the perfect concept. By the way, to answer your other question, I did pull it up. His line of credit started out at $330,451.55.
Nice. Nice. Yeah, I think in general in life, if you are talking to a company that spends a lot of money, that you see their ads during a football game, you're probably either paying too much or getting too little as far as product or service, just as a general rule.
Yes.
Okay, so let's talk a little bit about, because you built a great business. Let's talk about where your business comes from. Now, at some point, you have enough reputation, you have past clients, and people know of you, and we do these calls, and people call you. But there's a part in between when you were cold calling and building your business that you probably did business development. What was the source of business development that you focused on when you built your business?
Yeah, so when I was building it, it was nothing special besides work. I joined a BNI and I talked to as many people as I could talk to. And I thought of like the referral spider web. So if I talk to an attorney or a financial advisor, say I talk to a financial advisor, we have a decent conversation. I ask them, hey, is there anything I can do to open my Rolodex to help you? And also like, hey, by the way, do you have a good CPA who works with seniors? Do you have like a good estate planning attorney? Do you know anybody who owns a home healthcare agency? So I try to get a few, even if I couldn't get a client referral, because when you talk to these people for the first time, they don't know you. The only referrals you'll get is like a guy in the room. Oh yeah, I had this guy yesterday who needs to sell their house or needs to get a reverse or whatever the vertical is. But if you can say you can get 3 referrals of other business leaders from this guy, you say, oh yeah, listen, Bill Gross, great guy. I was speaking with him and he asked me to give you a call and thought we might have some synergy. Then suddenly you're not cold calling these guys. I mean, you really are, but you're cold calling, but you were kind of recommended in. And so that works pretty well. What I've done since then is I started, and this is back in 2016 or 2017, I started a YouTube channel just about reverse mortgages, and now we have over 1,000 subscribers, and I pop up videos whenever I can, whenever it's like on the business versus in the business, what can you do? So I'll throw up a few videos a month. I've actually been slacking. I haven't put one up in about a week and a half. Shame on me. But that's Florida Lifestyle Movement. If you go to youtube.com/ oh, that's me also. That's like a test channel that I tried to get people to move to Florida. I was like, I want to pick up their mortgages. But yeah, you just got to be creative, throw a lot of stuff up against the wall. If you go, YouTube and then / reverse mortgage reality. Let's see what we got here. Yeah, there we go. Yeah, so that's my channel right there. Nothing too flat. I don't spend a lot of time on it. I use Canva for these for my thumbnails. Canva's super easy to use. and it brings, I get multiple calls a week. Now, yes, you have to do it for a while. I don't know too many people who just start on YouTube and suddenly like, oh, I'm getting six leads a day. But if you don't take yourself too seriously, and if you say, hey, I got some extra time, and if nothing comes out of it, well, then what the heck? I'm just talking to the camera, and maybe I'm building these videos for my prospects anyway. Then it works out, or it can grow to something like this, where I'm actually getting about 70% of my, maybe even closer to 80% of my business off of it now.
I hope you'll pay attention to that. I'm in the same boat. You know, I built my YouTube channel. Probate Weekly is kind of the pinnacle of it. And then I do this as a live stream, and then I cut it into pieces and shorts and all that. And it makes it easy to do content because I don't think of much of ideas. I just have to kind of wind you up and let you go, and the content's kind of created. But everybody should have their own YouTube channel. And again, I think it's interesting that you have two, in that you tried something that didn't work, but you tried something else that did work. And I think that's another lesson you talked about at bats. And in some ways, I tried and it didn't work. I tried my first video channel on Facebook, and I'm not really sure why back then I did. Somebody recommended it. That's where my contacts were. And for various reasons, it didn't really help me build a business. It wasn't getting the attention of people that I wanted to. And when I got to YouTube, I was able to kind of create a strategy to get to those. So again, it's one of those things where I think it's really important. And remind me again, what percentage of your business comes from this, and how many contacts you get off your YouTube channel?
Oh, geez. Between, I should probably know these numbers, but between about 70 and 80% comes, I might even be selling that short. It might be more, but yeah, I get multiple calls and emails. If you go there, I'll type it into the message box. Go ahead, subscribe and like, of course, helps the algorithm. But if you look at it, I've got call to action all the time. This is my son, Jason. All right, come on in here. Let's see this new haircut. This is my son, Jason, who just got, we're live right here. He just got a
Jason,
haircut.
what's up?
On Latch Life. This is good, dude.
Yeah.
It looks awesome. All right. So yeah, if you visit if you take a look at my videos, I always have a call to action in the beginning, a call to action in the end. And yeah, your hair looks good. All right. Go son.
Little eye candy for the young ladies.
Yeah, right. So always have, you want to do that. You want to make it really easy. You want educational stuff. You don't want to be spammy. Like, I don't script any of this stuff out. I'll have PowerPoints, but I'm just talking just like this. But I just want to make it easy for people if they need a reverse, if they're an adult child whose parents are going through something, then I want to make it really easy for them to say like, hey, you know what? Jason, I don't know if you can help me, but do you want to take a look at it? Can you try? And that's it. Just real laid back, real friendly, be educational. Don't be spammy like a lot of these other channels. Don't look like you're reading off of a script with your eyes going back and forth. Just, you're an expert at what you do. Just yap about it. Talk about it.
It's so funny because I don't really do call to action. I do kind of point people to register and the Facebook group, I think, because I don't even think about saying subscribe or like, because I want people to engage and do the work, right? I don't want them just to like me. I want them to be on this call weekly, so they're learning and then contributing back to the group. I want them on Facebook weekly posting their content so I can learn about their content. I'm not doing it to build a Facebook group. I get paid by the Facebook group. And so I'm kind of the opposite, but I do like your style. I do think that's why we complement each other, because you are more calm about the whole thing. So that's a lot of fun. And so, and is this something, now you say that you just do content as it comes to you and inspires you. You're not really on a set schedule or a set program. Imagine if you did. Imagine if you did. You and I should, I've talked to you about doing I think I mentioned I want to launch a reverse mortgage podcast. I don't think there's really a live stream in that space that's consistent, that reaches out to the professionals, that also educates the related professionals, the attorneys and such, as to when to contact you. And so something you and I should talk about maybe offline, because I really think there's a market need for that. And I think I could do a good job. I think maybe you'd be a good partner to talk to you about doing something like that. So
dude, totally. Yeah. If it's worth your time, then absolutely. I know that this stuff is really worth my time doing it. And yes, I definitely should be more, I should have a tighter schedule on like, okay, Tuesday at 3 p.m. do 3 videos, something like that. But I'm kind of more like, oh yeah, when stuff comes up. One thing I actually did, and this might work well for you, Bill, in your business, or anybody when you guys who are watching it, I went to my 2 lists, my closed clients and my prospects. And I just asked them, I said, hey, because a lot of them coming to me from YouTube, so it's congruent. I said, hey, you know what? I'm having trouble. I've posted videos about damn near everything. I'm kind of having trouble with ideas. Can you give me an idea of like a question that you would ask, or maybe a challenge that you had when you kind of came to me? And then I've been doing, again, sporadically, not as much as I should, but I've been doing videos off of that. And that's that guy, Gary, who just got the line of credit. He wrote me like this long email saying, you got to talk more about the reverse mortgage line of credit. I go to all these seminars, I see annuities and all this other stuff. Nothing, absolutely nothing beats the reverse mortgage line of credit for a guy like me. He was like, you have to talk more, even though I have like 5 or 6 videos up about it. You have to talk more.
Isn't that
about
interesting? Oh, okay.
Yeah.
I'm sorry to interrupt you because it drives me crazy too. But I remember people need to hear something like 8 to 10 times before they hear it.
Yeah.
So you say you have 5 or 6 videos, and okay, you only need 5 or 6 more to really get people to understand it.
Yeah,
It's
and
frustrating, but
it's a function of YouTube also, because most people will watch the video. They're not going to know, especially like that, like the age demographic. They're not going to know to, okay, watch the video, then go in. By the way, I do a terrible job of asking people to like and subscribe. I always, it's like a blank.
no, you don't. I don't think you need
Yeah.
to. If they like it, they'll subscribe
Yeah.
or like. We all know what to do. It's not a mystery.
Yeah, but I'm
I
saying
think
they just can't find those other videos. So
Yeah.
you're right. You have to recycle them. And he came to me. He was the guy who came to me from YouTube. And I don't remember which video he watched, but there's a good chance that he watched that thing about the line of credit. And he was like, whoa, wait a minute. I'm free and clear. I'm turning 62. So I can just do nothing and just open up this line of credit that I can take later on if I want to, and not if I don't. Cool. Let me do it.
Yeah. Yeah, I think video is such an important tool for business people because it gives us a chance to communicate when we're not working. It gives our customers a chance to find us in a non-threatening manner and kind of meet us and get to know us. If we're authentic on the video, then they kind of met us already. They're not surprised when we talk on the phone, how we talk, how we act and such. They know what it's about.
It's a continuation. So it is so much, I feel like video. I would rather have somebody come to me. People might say you're crazy or wrong, but I'd rather have somebody come to me off of one of my videos than like a referral from a financial advisor or something.
100%. 100%.
Yeah. They're already sold. The video sells itself. As long as you're, like you said. Yeah.
And they know who you are. They're already sold. Like, can you list my house? Like, as the most common question versus from a referral, as good as referral can be, they don't know me at all. And sometimes a referral gives 2 people or 3 people, or they got referrals from 2 different referral sources. Versus they're calling me off the video. It's like, I can't believe you answered your phone. Well, who would answer my phone if not me?
Yes. It's a minor celebrity thing.
It's crazy.
It's goofy, but people will like, because they watch all of these and they think like, wow, I can't believe you do pick up that little like internet celeb type thing. So they'll, just like you say, Bill, when I pick up, they're like, wow, I can't believe you picked up. I can't believe I'm talking to you. I'm like, well, I just did these videos so you would talk to me.
That's the whole point. I work all day long to get you to call me.
Yeah, seriously.
And
but no, it's such a good tool.
Yeah, it is. Well, look, that's something maybe I need to follow up on. Like I said, I've had in mind to do this reverse mortgage podcast. I think the professional standards would be raised, and I think that there are and the vendors out there who work with reverse mortgages don't really understand the product well enough to refer it properly or to bring them in at the right time or put it in the planning stages. I think we should be making referrals to estate planners. I know I had the first reverse mortgage I ever did. The customer put me in their estate plan as when it came time to sell the property, that they would at least interview me as a listing agent on the property, which was fantastic. And why? Because they knew I was part of the planning process and they wanted somebody who's professional to do that. So
that's so cool. That's awesome.
Well, to be continued. So anyhow, I think we're coming up at the end of the hour here. And I know I was nice enough to get you're nice enough to give me some time here. So we want to wrap up. Jason Eichmiller is reverse mortgage specialist. He's based in Florida, but he is doing business. I saw on your thing licensed in a bunch of different states. Where do you do business? Across the country or just the states you're licensed in?
Yeah, just the states I'm licensed in. So California for one. Actually, it's
go.
funny. I live in Florida, but the majority of the reverses I close are in Cali. I've got one guy who got counseled in California 2 days ago. A lady who's actually getting counseled in California in 8 minutes. Alex, who's closing this evening. So I do a lot of business in your state. Florida, I'll probably screw this up. So California.
Well, I'll read it on your
yeah.
Florida, California, Pennsylvania, New Jersey, Maryland, Colorado, Texas, South Carolina.
Yep, that's it.
Or on your website.
Yeah,
Cool.
it's all there. If you want to, I don't know, you can go to the YouTube channel. If anybody has any questions, I can put my contact information here, and feel free to, like, even if it's on the marketing side of things. I'm definitely not an expert marketer, but I just found something that works pretty well on YouTube. And again, if you're looking at starting up something like this, then just go overwhelmingly friendly and avoid the techno babble. Right? We all have industry terms. You should take those industry terms, be cognizant of them, stick them in your back pocket. And when you catch yourself saying something silly like that, none of these people care. Not at all. They just want you to help their problem. So say, oh my God, I can't believe it. I sound so silly. This is just industry jargon. Let me tell you what it means in English. I catch myself doing that stuff sometimes still.
So again, Jason Eichmiller, reverse mortgage specialist, but also entrepreneur, businessman. I think we learned a lot today about building our own business. Thanks so much for your time today. I'll have his contact information in the description down below. Second time, you'll get the second time guest on Probate Weekly. Thank you so much for being on today. Really appreciate you.
You got it. No, thanks so much for having me, Bill. And yeah, for everybody else watching, feel free to reach out. And Joanne, if you want to talk about specifics on paying off that, like options to pay off the reverse versus doing other stuff, then feel free to reach out. We can go down the rabbit hole and just figure that thing out if you like.
Thanks so much. And for the rest of you, again, this is Probate Weekly. We do this every Wednesday live it's a Zoom call format. We do this live at 9 a.m. Pacific time, 12 Eastern time. Register at probateweekly.com. All we need is your email address. You'll get a reminder every week to click on the Zoom link, or you can go in and subscribe on the various audio formats as well. And we're on YouTube. You can see all the past episodes if you scroll down there as well. We continue the conversation on Facebook at probateweekly.com. Go there and you can post your probate and trust related content. Love to have you there. Looking for referrals for agents or attorneys across the country in probate and estate planning. Love to have you there. Again, our guest today was Jason Eichmiller, who is a reverse specialist with keyhomelending.com, and there's his landing page as well as Facebook picture of him in the middle there, and then some guy on the right who helps him with his mortgages, so you can catch up with him. And then his YouTube channel is at Reverse Mortgage Reality, or you just put in Jason Eichmiller and you'll get to him, and you'll learn more about reverse mortgages. So thank you everybody for being on the call today, and we'll talk to you soon. Bye-bye.